Well, good afternoon, everybody. Welcome to another episode of The Everyday Trader. This is one of your hosts, Eric Hale, and with me is...
Glad to be with you, Greg Jensen, CEO of OptionsANIMAL. Glad to be here. Beautiful summer day still.
Yeah, we appreciate the feedback that we've been getting. Weather's here is nice in Illinois, but we appreciate the feedback we've been getting from people. Very positive. Please continue to ask questions in the comments. And if you like, and so I've had people texting me or emailing me. It really would help us out if you ask the comments down below because it helps with the YouTube algorithm. So post your questions here, subscribe and like and share with your friends if you would. So let's start up with some personal stuff. Let's go on. How are you doing with how are things happening in Idaho? Idaho. I almost said Iowa.
So
we're talking about my Iowa.
Notice I'm wearing a hat today. I'm going to rep my college roommate. I went down to Utah this last week. Local cookie co. He started a cookie company. So I told him,
is this a product placement? Is this an endorsement?
Our first product placement right here.
Are we going to get paid for this? I expect free cookies.
He's going to come up and take us fishing.
He is.
Yeah. So you need to come out.
Okay, definitely. I got to tell you that I will accept. Normally, when I go to a new website, I don't accept cookies, but I will accept those cookies.
Okay, all right. They're good. They're good cookies. Anyway, sorry. No, personal life's good. Cleaning garlic the last couple of days too. Garlics was beautiful in the garden this year. Took it off a couple weeks ago. It's been I don't even know the right word. Drying, aging, hardening off in my garage. So today we're cleaning it off.
Your air's pretty dry out there anyways, right? So
we planted 7 different varieties of garlic, a few hardneck varieties, most of them soft neck, but chestnuts and I mean it's going to be good. We got a lot of garlic. So anyway,
well, next time I see you, maybe I'll have to grab some because
I need to give you some to put on your. We were having a conversation before we started about pork.
Oh yeah. So we were talking. So our tech guru, who is the thread and the fiber that holds this entire organization together, Colin, was talking before. Yeah, I've got I think like a big hunk of meat, a Boston butt from Costco. I think it's probably 12 pounds of pork. We were talking about how to cook that. So I'm going to put that in the Pit Boss probably this weekend, 12-hour estimated with get the temperature to 205. My friend Sam, who you know, well, we could share with everybody. I happen to be pretty good friends with Samuel Jackson, and he makes his own rubs. So, not the same Samuel Jackson, but
Samuel Jackson is much cooler than that.
He is much cooler. He is way
much cooler,
and he doesn't drop the F-bomb quite as much.
I bet you we can get him to next time we see him.
Oh yeah, you can get him going. He makes his own rubs that are just out of this world, and so I've used his beef rub on my brisket, and the pork rub I've used for a while. So I'm going to do a Boston butt. He's been on me to do more pork anyway, so I'm going to do that this weekend.
Cool.
But I got to share my previous weekend. What happened?
You had a big weekend last weekend.
Yes, my lovely daughter got married. I'll show you a picture here in a second if I can find my controls. Share the screen. So there's a picture of Emily, and that's not her husband. That's Sadie. But that's my daughter, who's absolutely beautiful. Here's a picture. We got more pictures coming, but that's Michael. So my daughter's now named Emily Shannon. Michael has 4 brothers and a sister. So there's 5 boys and a girl. And Emily is the second Emily Shannon in the family, but she was the first one to be dating a Shannon boy. So anyways, that was my weekend at the wedding. We had a really good time there. Lots of family in from out of town. It was good to see everybody. That was my weekend.
It's awesome. That's awesome.
Yes, I haven't been doing much else other than a little bit of jujitsu and some bike riding here and there, but also paying attention to what's happening in the market. We had some pretty interesting stuff that happened over the past week. What was the biggest thing that caught your eye this week?
The bounce. I mean, we bounced. Obviously, the sell-off's been really painful the last 6 weeks. If you've been long the market, not last 6 weeks, probably only the last 3 weeks, 3-4 weeks. but it's been a really sharp sell-off, and we've bounced midweek. And to be honest, the interesting part of the bounce is that it was on a nice solid number on the S&P. 3,900 is right where we bounced, where that support level was. We had bounced back there in the past, and will this be a legitimate change out of the downtrend? Maybe. I actually like the uptrend that started. The problem is the narrative hasn't really changed that much. If you listen to what's really been driving the market, what's been driving the market's been the Federal Reserve, and their commentary really surrounding two messages. Number one is they're still intent on battling inflation as long as it's present, as long as it's above their 2% target or 2.5% target. And they'll be aggressive with it as long as it's not impacting the jobs market. And the jobs market, the data we got this week was one of the best, non-farm payroll. It wasn't non-farm payroll, that was last week, but the weekly jobless claims number was really good yesterday. The jobs market's still really strong. And I think and you heard Fed Governor Waller today reiterate kind of the same message we've heard from Brainerd earlier in the week, and from, of course, Fed Chair Powell, which I'm going to let you talk about Powell's commentary a little bit. But it's basically the message is echoing, Chairman, of we're going to battle inflation. We're going to be aggressive battling as long as the job market is resilient. And so far it still is, and inflation's still present. So the Fed's still going to be raising rates. In fact, I think the general accepted view is we're going to see another 3/4 point later this month.
Yeah, I have to agree, although to me, nothing was a surprise. I think, I don't know, you and I have been fortunate to talk with some people firsthand, like Governor Waller, about, if you look him in the eyes and listen to what he's saying about the market and in the economy, that the Fed is committed to getting inflation under control. So 75 basis point, which the other point we've mentioned before is from the Wall Street Journal is Nick Timiraos. And Nick had a couple pieces this week reiterating the 75 basis point. In fact, Nick, again, this is I watched the Cato Institute monetary policy, the 40th monetary policy of the Cato. I'm a benefactor for the Cato Institute, so I have attended some of their live events and I get a lot of their publications. I'm a big fan of the Cato Institute, like the work they're doing. And watching live, Nick Timiraos released the press release wrote a story about what Powell was going to say when Powell had already said it. So it's very clear that the narrative is being directed. I don't want to say it's not manipulated. It is a very concise. And I'm going to show a picture. Here's Nick Timiraos of the Wall Street Journal. I do suggest people follow him. He has the nickname of the Fed Whisperer. So these several pieces that have come out, all three of these saying clearly a 0.75 basis point hike. And what I thought was pretty interesting, as you mentioned, the bounce this week. So we had a pretty significant move up in what could be considered hawkish language, which is normally taken as a bad indication for the market. It's when the Fed is more hawkish, their intention is to slow down the economy and try to get inflation under control. So I guess it's interesting to see. I do have a theory about why we saw this bounce today, which I think is more, I don't want to say technical. I use the word mechanical, and I'll explain that in a bit. But you had mentioned the heat map on FinVis today, which is, holy crap, my inkjet printer is out of green. It's like, it is a sea of green today. This is today's one-day performance from finviz.com. Was 1 week performance. You got a little bit of a mix in here, but certainly over what we've seen here in the past few days has been a pretty significant bounce. Before I jump, did you have anything to add on that before I jump to that technical aspect of
No,
it?
because that's actually where my view is why I think the bounce was too. So I'm interested. We haven't talked about this yet, so I'm interested to hear your opinion on things. Because yeah, I do believe that the markets were simply oversold. We were going really fast to the downside the last couple of weeks, and that, of course, remember, was following the Fed chairman's remarks in Jackson Hole that really started us spiraling to the downside. And I think we were going too fast, and I think you're seeing some short covering rallying going on. But love to see your opinion as to the plumbing issues. We'll call them that, as to
Sure.
what the bounce was about.
So your thoughts on the oversold and the right for a bounce? And we're definitely down in the low end of the Bollinger Bands and the MACD below 50 and the RSI pretty low. So it's from a technical standpoint, I think there's another contributing factor, and this is one that seems to grab a lot of credence. And the guys at Tier 1 Alpha are doing a pretty good job sharing some data. And man, we said we weren't going to get terribly wonky here. But I do, suggest taking a look at this, and I'm just going to boil it down to something really simple, and it's the gamma exposure, which
Yeah.
the name right there, people eyes are glazing over. But just let me tell you in English what this means. When the gamma is negative, market makers need to chase the direction of the stock. And what that means is if the stock price goes up, in order for market makers to minimize their risk, they have to buy stock. And if the stock goes down, because market makers, when you buy or sell options, they are buying and selling stock to go with it, or futures or something else. They're hedging themselves. So when gamma is negative, what that means is in order for a market maker to control their risk, they have to either buy or sell in the direction the stock's going. So the stock's going up, they have to buy stock. Stock goes down, they have to sell stock. And that is, if that is, it's not probably not the entire cause, but it definitely is a contributing factor into why we're seeing more volatility in the market, and that why the up days tend to be strong and the down days tend to be strong. There's no question about it's contributing. Again, if you're interested in this newsletter, I have no connection to them whatsoever, but they do a free newsletter, Daily Sit Rep, Tier 1 Alpha. You can Google them and find them. They're also on Twitter. They do a pretty good job. Now, a little bit of critique on these guys. They are getting a little bit deeper, and they're adding some more stuff and some other thoughts. And I don't really like all the additional commentary. I hope they stay in their lane and just keep it focused on this one key metric, which they really brought to light, is this gamma exposure. I've seen other places picking the same information up. There's other ways to get the data. This place isn't, it's a pretty good place to get it. But that, I think, is in large part contributing to why we've seen such wild, or more volatile moves in the markets. It definitely is contributing. So that's my read on it.
Yeah, no, I agree with that. I pulled that chart up that you had before, or I think the chart that they had referenced right there in that article about the abnormal amount of institutional hedging that was going on last week, and the amount of puts versus calls bought. There was, and the number that was thrown out was $8 billion of puts that were purchased on an institutional basis versus only $1 billion in call options, which is a huge imbalance put to call ratio, showing the institution's negativity about the market right now. And that in and of itself may have created, or at least added to, the technical bounce that we're seeing. Now, the one thing I will add, both from a technical standpoint and this plumbing standpoint that Eric just pointed out, is these can reverse very quickly because there's nothing fundamental driving that. And as soon as the imbalance clears itself out, and whether part of this is short covering and there's new pressure put back in the other direction, that can reverse very quickly. And so I still think it's really important that you understand that this bounce may be happening technically, but because I haven't seen the fundamentals change, I'm skeptical of chasing this rally right now. There's still way too much uncertainty in the next 6 to 8 weeks as we approach the traditionally volatile months of September and October. I guess we're already in September. We have earnings season coming up. We're seeing more and more earnings numbers getting lowered. We have all-time high record strong dollar right now, which is typically going to be a drain on big multinational earnings. Typically it's a drain on the stock market. It's on the S&P as well, but so it hasn't reacted the last few days that way. And then you have the election coming up in November. They're all just, I'm not saying that those are all negative things, but they're unknown things. They're volatile things. And so because of that, I'm not chasing this market, this bounce for sure. In fact, if anything, I'm maybe looking at it as a way to maybe enter some speculative bearish trades going into the month of October. That tends to be usually really bearish anyway.
Interesting. We had another big event this week that I think is worth talking about. You and I are both big fans of Apple.
I thought you were going to talk about the Queen.
Oh, well, that's Freddie Mercury. No, I'm sorry. I don't want to make jokes of that. That's awful.
She lived a long, beautiful life. I've seen some awesome, tributes to her. You probably watched the one on Twitter where I don't know who it was, one of her main assistant, where they were out in the countryside and someone didn't know who she was, didn't recognize her, and just started talking to them. An American tourist started talking where they lived, and she's like, "Oh, well, I live back in London, but I come out here often." And he knew he was visiting the Queen's vacation house. And she's like, "Oh, I've lived out in this. I've come out here for about 80 years." It's like, "Oh, well, then you must have run into the Queen, or you must have been introduced to the Queen." And she kind of chuckled and said, "Well, I haven't ever, but he has a lot," pointing to her assistant. And he laughs. And so the guy actually wanted to get a picture and actually handed the camera to the Queen to see if he'd take a picture of him and this guy. Anyway, I didn't see that. It was kind of a fun story that was being recanted. So anyway, it's the Queen, this is she lived a long, very well-respected life for sure.
Yeah. So long live the king now, I guess is what we say. So I don't know. We left that all, a couple 250 years ago or so. We all kind of separated. So I have a lot of heritage too. My genealogy is all English and Scottish. So I think there's a tad of Irish in there someplace, but not not a lot. No, the other big event that I was talking about was the Apple event this week. Certainly a big indicator of big part.
I like the new color.
The new color?
The deep purple.
The phone that's deep purple?
Yeah, have you seen it? Did you like the color?
I don't, I think that's that's funny that's the first thing you talk about, because I saw a headline saying that Apple releases the iPhone 11 for the fourth time.
Yeah.
I mean, they say revolutionary. I think evolutionary is the thing. It's longer battery life. The satellite thing is fairly interesting, although I don't know how that all works. There's some neat safety, fall protection tools. I'll probably end up getting one. I was gonna get up and pre-order one. I didn't yet. I thought about it. Look, I got an iPhone 12, which is it's a couple years old, so it's probably due. I mean, I'm in the upgrade program, so it really won't cost me anything to.
Is it bad that I don't remember which one I have?
No. I'll tell you what my favorite product was, though, and that is the Ultra. I'm a big Apple Watch user.
I still have an 11 Pro.
Oh, there you go. So that's not much different than the 14, I think.
Yeah.
You happy with it?
Yeah, does everything I need it to.
I think this new Apple Watch Ultra is pretty cool. It's coming in at $700. I'm very hard on my watches. I've had an Apple Watch since day one. I bought the stainless one.
You are the first one I know who owned an Apple Watch.
I can't, I'm naked without it. So I'm interested in this one because I beat on my watches pretty hard, and I play pretty hard. And I think there's some interesting features on this one. I probably will have this before Christmas. I'm not sure when. I looked at putting an order in for one. The one that I want, and it's mostly due to the band. I don't like those loop bands. I want the adjustable band, and that's not available till the end of October. That was if I ordered it yesterday. That's probably pushed out a little bit. So I thought the Ultra watch was pretty interesting.
Yeah, I did too.
And then they got a low price for those entry levels. Actually, I was going to talk about entry level price on the SE watches. They're very approachable now, very affordable. I think for most people that you can get in at 250. I think it's definitely worth $250 for what you get out of these things. They're gonna probably help you. I mean, just the safety and the health benefits alone.
The health benefits alone, I think, are fantastic. That to me has been one of the best features of the Apple Watch.
But I meant to go back to the iPhone 14.
And maybe we're saying something about our age, Eric. Saying
that. Back to the iPhone 14. The thing that was surprising to me was that they kept the prices the same. So there was a lot of talk about whether they would increase the prices of these phones. I mean, you could still get into the 14 now for $800, or the iPhone 14 Plus for $900. Then there's the Pro models, which are the prices. They expected the prices to go up $100 or $200. They didn't. I think a lot of that, I'm repeating what I've heard from other analysts, is that a big part of this is Apple Silicon, that the fact that they're making their own chips, so they have a little bit of their destiny under control. My concern, and this is one that I would have been looking for a shock in the price due to, maybe margins. And so we won't know until we get some, a couple quarters before we know for sure how this is impacting their gross margin. But certainly keeping people within the walled garden of Apple, the entire ecosystem of, Apple watches, Apple phones, and of course the new Apple EarPods. Do you have the AirPods?
I do. I'm going to get these new ones though, because my son stole my AirPods when he went to college. So
I'm on my second pair because I threw the case away. I was doing yard work and I had them in my ears, and I was picking up garbage, and I didn't realize it until I threw them away. So now I'm my second pair. I wish I had waited and bought these, but yeah.
I will be getting a pair of those. That to me was to be honest, that was the thing I was the most excited about with the announcement, was the new AirPods.
I don't know if you watched the presentation, but at the end there was a sneak. We talk a little bit about TV shows. I know you're still watching Lost. Have you watched Apple's series, The Severance?
No, I need to.
Yeah, you need to watch Severance. It's a really good one. It'll make you think, and it's got all kinds of interesting, I think, moral and ethical. The gist is that people can forget what happens they can separate their lives between work and home, and they completely forget. They have no connection of what happens between the two. So they go into work and they will completely forget who they are, what their relationships are, and everything. And then they work, and then they go home, and then they don't have any memory of what happened at work. It's really, at the end, there was a little half a second flash of one of the characters. So I'm kind of excited about that show there. As far as TV shows, you're still watching Lost. Diane and I are into the second. We're kind of through a lot of stuff. We're watching Lock and Key second season right now on Netflix. It's okay.
Have you started the Lord of the Rings one, the one on Amazon?
And I'm going to tell you, I know that people are saying Tolkien's spinning in his grave, and I can understand where they're coming from, because if you're a Tolkien purist, and I did read all the Hobbit books, but it's been so long. It's probably high school since I've read them. So I'm okay. From a purely entertaining standpoint, it is very entertaining and I love it. So I know people are having a hard time with the fact that every man in the show is either a jerk or a wimp, and all the powerful figures are women, and they've got some diversity things going on in there as well, which, I mean, it's okay. I don't have any problem with it. I think the show is still very well written and fantastic, and it better be for $1 billion or whatever it costs to produce that thing. But you're gonna wait until you can binge the whole thing?
Yeah, and just of what you've told me already, I know I'm going to be upset. I'm a purist. I was upset. I was upset with Peter Jackson's first version because Tom Bombadil was not in the movies.
Right. And I know did you watch Wheel of Time? I know you're a big fan of that too.
Yeah, I did. Way off. Movies again, same thing.
The book was better. Yeah, the book was better.
Book was better.
Yeah,
book's always better.
Well, how about Reacher? You watch Reacher? That's another one.
Yeah.
All right. So speaking of Lords, I did finish the Lords of Easy Money, and that was like getting punched in the gut. It's the complete opposite of Nick Timoros's book on the Federal Reserve. They overlap and they talk about it. They definitely give us two different perspectives. It's worth reading both to understand them, but there's a lot of doom and gloom that's out there. And I honestly, back to the Fed, I happen to think you're seeing language now talking about a softish landing or indications that we may be doing well. I would agree with that. I think that we are probably going to pull off a soft landing. And real quick, there's some reasons why I think there's hope. And you and I talked a little bit about this ahead of time. We don't want to get too wonky in too often. So we've already had some wonky stuff talking about, dealer gamma. We're not going to throw another one on our listeners, but I am going to do a deeper dive or short dive into yield curve, and also looking at, there's a paper published recently that looked at leading indicators that included things like the Buffett indicator and CAPE ratios and S&P 500 earnings and yield curves, to look at what are the best prognosticators of a down market. And so I'll save that as a tickler for people that we're going to do one of these hopefully early next week, and we'll dive into those topics. I don't want to go any deeper than that here.
I think by early next week, we probably could have an indication whether this bounce is a legit bounce or if this is just a short covering rally and we're going to turn back lower too. I think we'll know that at least by middle of next week, whether this is a rally that, could be the lows. Maybe the lows were in June. I'm hoping that too. And maybe we'll talk more about that next week when we talk about some of the other things we're looking at. I think especially in the broader economy and some of the strength that still exists out there, specifically in the jobs market. So.
Yeah, there are some indicators to keep an eye on, and I still contend, and I think I've thrown this out to this audience before, that I think the commission, that the coming election, and there's a lot of choppiness in how that's going to play out. We've seen some political moves that have been interesting. We don't want to be political here, but it does affect the market. So I think we've seen some choppiness in what's happened in those markets. And if you look at some of the swings and the probabilities of the outcome of the November elections, they do kind of correlate. I think they're providing some input into the election. And I've seen some analysis from some of those people that we have mentioned before, talking about the effect of the election on the market. So I think that can't be ignored either. So we're keeping an eye on everything. I still think, and we've said this from over a year ago, that this year is going to be choppy. I think I wouldn't be surprised if we have a big pullback either in September or October. It's what I've said for months. I mean, literally 6 months. I've said we're going to chop sideways. We're going to hit volatile, probably bottom around July, and then we're going to chop sideways, and then there's a pretty good chance of a big pullback that's going to happen in September, October. I do happen to think that in November, we're going to see a bounce and things turn around. So I'm trading exactly like that.
Me too. Volatile for the next couple weeks or next couple months. And then I think we rally into the year, assuming, we don't have another wheel fall off the bus, but I think same thing. I think we're good. We've got more volatility for the next 2 months. And then I think we can really rally into the year.
You don't have to agree with me. I like it.
No, I'm the same way. I think we'll rally right back up to 4,100, which was my target at the beginning of the year.
That was pretty good. Yeah, I was a little bit more bullish than you. I did want to talk about one other equity, and I threw this out just as an example.
We got to talk about this.
Yeah, so Tesla, I've been doing a trade on Tesla right now. I haven't had an in the money cover call. And let me share my screen again. So here's Tesla, and excuse me, in the money cover call would have been great. The stock rolled down, and my short call went out of the money. So I rolled the call down so that the trade would have been profitable. Would have worked great in a stagnant trend, but now the stock has popped back up. And that's fine. It's actually quite fine. The trade that I have going on right now, let's see if I can pull out. This is the actual adjusted trade based on the cost basis right now. So I've got to break even at $270 if Tesla, which is trading at 299.34, it's got about an 80% chance, high 79% chance of making money. 451 is what it would make right now, which is a little small, but but I'll continue to manage this by rolling the calls to generate more credit, and I'll keep people up to date on this. So yeah, it's nice to have strategies that work in multiple directions, and there's a trade-off between risk and the amount of money you make and the likelihood that you make money. I'm more happy having a higher probability of making a smaller profit as long as it's a good use of my capital, which I target around 20% return annualized. And that's what I expect to make on that trade. So it's another sort of a trade to consider for people. There's moving parts there. It's pretty simple, but it's one of those things that's, it requires some understanding that it's a little more deeper than just understanding a call and a put. Calls behave differently depending on where we are relative to expiration and where they are relative to the money. So some experience and some learning can help in that area. But that's about all I had to share this week, Greg.
Okay, great session. Let's wrap it up. Let's remember to like and subscribe.
Yeah. Click the buttons wherever they are.
Click the buttons wherever they are.
So like, subscribe, ask for notifications, more feedback, and don't hesitate to ask questions down below or say, hey, can you talk more about this? Or I'd like to learn something about that. We'd love to get your feedback. So thanks everybody. And we'll look forward to seeing you next week.